On Business Incorporated today, South African government looks to deregulate fuel prices. And strike looms in Zimbabwe civil service as salary talks with union break down. Ghana gets $100 million from the World Bank for Ghana Productive Safety Net projects. Hello and welcome to Business Incorporated, the first one for the week. I'm Ini John Mekwa. Let's start off as usual with major markets in Africa. In Nigeria, the NGX had a tumultuous week last week, and it seems to be creeping into this week also. At intraday, it was down more than 1%. The JSE is also not left out. It's down 0.11%. Egypt's share index lost almost 0.15%, while Kenya closed Friday positive more than 1%. In the Middle East now, we see that it's all negative. Abu Dhabi jumped 0.44%, with Dubai also in the red, about the same amount. And Saudi Arabia was down also more than 0.5%, while Qatar was in the green, just up 0.38%. Let's go to Europe now and see what's happening there. And I think one of the biggest stories coming from there is the grain export deal between Russia and Ukraine, brokered by the United Nations and Turkey. Let's have Rob Watts joining us now. Rob, good afternoon. It's a deal that got everyone excited on Friday, but the mood has now changed. What's the latest?
There was a huge amount of optimism on Friday after the deal signed by Russian and Ukrainian representatives, because the fact that millions of tons of grain have been trapped at Ukrainian ports has driven up prices enormously since the start of the war and led to a crisis on global food markets. As a result of that deal, we saw the price of wheat drop 6% on Friday to pre-war levels for the first time. However, that was somewhat short-lived. Over the weekend, Russia attacked the Ukrainian seaport of Odessa with cruise missiles, putting that deal at risk. The agreement includes a provision that merchant ships and port infrastructure will not be attacked. Now, Russia says its attack only targeted military infrastructure in the city, so it doesn't breach that agreement. But nevertheless, it shows that the full restart of grain exports isn't going to be as simple as some might have hoped. And as a result, we saw wheat prices leap on Monday by 3%, so clawing back some of what it lost on Friday, something of a reality check for countries that were hoping they could once again start to rely on Ukrainian grain.
Yeah, well, very dashing of hope is what we see there. And some people have described that as a complicated deal. But still on Friday, we saw the Volkswagen CEO surprising market by announcing that he was going to step down. Do we now have more details about this?
Well, Herbert Dies's decision to step down doesn't appear to have been entirely his own, at least if media reports are to be believed. Bloomberg is reporting that a plan to oust him was set in motion a week ago by what it describes as the reclusive clan that majority owns Volkswagen. They appear to have told Dies it was time for him to go while he was still jet-lagged after a trip to a VW plant in Tennessee in the US. It follows a couple of years of growing discontent in his leadership at the German car maker. There was, of course, the diesel emissions scandal, which emerged while he was in charge. There's also been disputes with workers' representatives and concerns that Volkswagen is falling behind rivals like Tesla by just being too slow to react to new challenges like the electric car revolution. So Dies is leaving at the start of September, having taken the helm back in 2015. He'll now be replaced by the head of VW's Porsche division, Oliver Blumer, who has a long history of key positions at the car maker and has developed a reputation as something of a rejuvenator, having brought new life to Porsche.
All right, we'll certainly see how he brings more life to that. Let's look at the market. How's it doing at the start of the week?
Well, following all of last week's anticipation of the European Central Bank's interest rates rise, this week attention turns to another major central bank. This time it's the US Federal Reserve. It's holding its two-day meeting early this week, concluding on Wednesday, with a hefty rates hike expected at the end of it. Consensus seems to be that it'll be in the order of 75 basis points, but there's a small chance that it could be as much as 100 basis points, and that'll take US interest rates even further away from those here in the Eurozone, despite the ECB's 50 basis points hike last week. The expectation of that aggressive Fed rise dragged on Asian markets at the start of this week. We'll see what impact it has on European markets as the week goes on. Meanwhile, Ryanair kicked off the financial results in Europe this week, with the budget airline posting a return to profit in the first quarter of the year, thanks to the bounce back in demand as people try to move on from the depths of the pandemic. But Ryanair has stressed that the aviation market here remains very fragile.
All right, Rob, thank you so much for that. And talking about Ryanair, we'll talk about it with Juliana joining us from London. Hi, Juliana. Good afternoon. Rob already started off that conversation about Ryanair returning to profit. But, of course, we still have the threat of COVID hanging just there in the air.
Absolutely. I think Rob did go into the detail, because the main story really, Innie, is that Europe's largest airline has returned to profit for the first time since COVID showed its ugly face across the world. They reported first quarter profits of about 183 million euros. If you compare that to this time last year, they were reporting losses of about 392 million euros. One of the reasons why things have been so good is because of the lifting of many COVID restrictions around the world. This has fueled a surge in passenger demand, which we've seen at the airports. And part of the criticism from chief execs today at the Irish airline is that airports should have been better prepared. That why were the airlines prepared for this surge in demand, but airports not so, which is why we're still seeing really dramatic queues. But as you quite rightly said, there are still some concerns, one of them being most crucially the ongoing war in Ukraine. Of course, that stopped flights going to that region, and several others that are in close vicinity. And as you quite rightly said, Omicron too, it's not gone anywhere, although it does appear as if we are living without COVID. It is still negatively infecting millions of people across the world.
It's looking like at this time.
I missed that first part, but I do think we are talking about the markets, and the markets are in the red, actually. The FTSE was much deeper in the red at early trading, but it's got back some of those losses. Again, as you were discussing with Rob, I think the big thing investors are going to be looking at this week is what are interest rates going to be in the US after the Jerome Powell convenes the Federal Reserve for their two-day meeting. This is a really significant hike. We saw the first hike in 11 years by the ECB last week. So many discussions about just how far Andrew Bailey and the Bank of England should go when they're due to meet at Threadneedle Street in a couple of weeks. And I think that's left investors fretting slightly, which is why the FTSE is in the red at intraday. It's down 0.23%. The FTSE 100 down too by 0.23%. But the FTSE 250, the domestic market, that's up slightly by just over 0.10%. I think the results from Ryanair really did boost other travel-related stocks like EasyJet. In the currencies market, the British pound is currently trading up against the US dollar by 0.56%, up to against the euro by 0.23%, and up against the Japanese yen at intraday by 0.65%. Innie.
All right, Juliana, thank you. We hope something else will boost the market tomorrow. Thank you so much. So let's move to other markets now. In Asia, Hong Kong's Hang Seng Index dropped by major indexes in Asia Pacific slipped. The Hang Seng Index in Hong Kong fell 0.22% to close at 20,562.94, and the Hang Seng Tech Index lost more than 1%. Hong Kong shares of US-listed Chinese companies dropped. NIO plunged 6.42%, Xpeng lost 6.3%, and Alibaba fell 2.45%. Mainland China markets were also lower. The Shanghai Composite slipped 0.6% to 3,250.39, and the Shenzhen Component shed almost 1% to 12,291.59. In the United States, stock futures rose this morning, coming off a positive week for the major averages as traders brace for the busiest week of corporate earnings, as well as insights into further interest rate hike from the Reserve. And Dow Jones Industrial Average rose 173 points. S&P 500 futures and Nasdaq 100 futures gained 0.5% each. The S&P 500 has been attempting a comeback after falling into a bear market earlier this year. The index is currently up more than 8% from its 2022 and trading near the highest levels since early June. Oil prices were relatively steady today as the market balanced supply fears with expectations that rise in U.S. interest rates would weaken fuel demand. Brent crude futures for September settled at $1.18 to $104.38 a barrel, while U.S. West Texas Intermediate crude futures rose $1.29 to $95.91 a barrel. Oil futures have been volatile in recent weeks as traders have tried to reconcile the possibilities of further interest rate hikes, which could limit economic activity and cut fuel demand growth against tight supply from disruptions in the trading of Russian barrels because of Western sanctions amid the Ukraine conflicts. In the metals market, gold prices slipped as an elevated dollar and prospect of an aggressive interest rate hike by the U.S. Federal Reserve this week dented demand for non-yielding bullion. Spot gold was down 0.2% to $1,722.84 per ounce after rising to a more than 1 week high on Friday. U.S. gold futures fell 0.5% to $1,718.70 per ounce. The dollar rose 0.1% against the rivals, making greenback price bullion more expensive for buyers holding other currencies. The U.S. Central Bank will conclude a two-day meeting on Wednesday. We'll be talking about that. And markets are pricing in a 75 basis points rate hike to combat soaring inflation. Spot silver was down 0.6% to $18.48 per ounce, and platinum dipped 0.6% to $868.62, and palladium slipped 1.5% to $1,999.94. And just before we take that break, let's look at Ghana just a little bit. The government has secured $100 million World Bank funding support for the implementation of Phase 2 of the Ghana Productive Safety Net project. The project is being jointly implemented by the Ministry of Local Government, Decentralization and Rural Development and the Ministry of Gender, Children and Social Protection. The project has 5 main components, which are production, inclusion, labor-intensive public works, livelihood empowerment against poverty, social protection system strengthening and project management, coordination and capacity building. The first phase of the project started in 2019 and executed by the MLG DRD and expected to be completed by October this year, benefited 80 districts nationwide, which have seen the provision of skills for 21,108 beneficiaries in 331 communities. We have more conversations on Ghana and other parts of Africa, but that'll be after the break. Do join us again. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. And now we took a break on Ghana and we come back on Ghana. In May, the central bank government said that Ghana faced an overall balance payments deficit of $934.5 million in the first quarter of this year, compared with $429.9 million in the same period last year. Growth slowed to 3.3% in the first quarter of the year, and inflation hit a record of 27.6% in May. Critics say the government has recklessly managed its finances with excessive borrowing. The country now spends about a third of its expenditures just servicing debt, not including the principal repayment. Well, we have to help us understand how this is affecting Ghanaians and what could be done. Professor John Gatsi, he's the Dean at the University of Cape Coast in Ghana. Good afternoon, Prof. Thank you so much for joining us.
Good afternoon.
So just before we go to all those numbers and all, the Fix the Country protests are finally being calm. Is it over now? Have they been settled?
Well, we don't see such groupings anymore. We hear about them once a while in the media. But what is happening is that everywhere you go, people are discussing how precarious the economy of Ghana has become. On school campuses, when teachers come together, they are discussing it. In the trotro, that is commercial vehicles, people are discussing it openly. So it is not just a matter of whether or not there is some groupings demonstrating, but it has become a talk in town, and almost everybody is concerned.
Everyone is concerned, but I mean, it's also important to note that, even back here in Nigeria, outside Nigeria, the economic parameters are not very friendly at this time. While the world was trying to recover from COVID, then you had the Ukraine war, which is still impacting different parts of the economy. So I see that some Ghanaians believe that the government is not prudent in its spending. But how true, from your perspective, is this thought?
I think that is true to a large extent. When the government attempted to provide that expenditure record of COVID-19, Ghanaians got to know that the amount of money we raised for COVID purposes are far, far above what have been spent. And government is being called upon not only by Ghanaians, Parliament, but also ordinary people and IMF to do COVID-19 expenditure audit. That is not being done, and attempt was made to do that through Parliament, but it was blocked. So that gave impression to people that no, things are not being done according to prudent management. And most of the challenges Ghanaians are facing were only aggravated because they were there before COVID-19 and Russian situation came. And Ghanaians are realizing that some of the burden from Russia-Ukraine war were just poor policy formulation and implementation, because most of the items for which we are saying prices have gone up, they are things we have the ability to produce in the country. So they thought that it's not merely about a hike in inflation, etc., but also it's an exposure that we have not been very prudent in providing the policy environment to be very productive in such areas.
So what should the government be doing at this time, at least from your perspective and from the conversations you've been having with the protesters and ordinary Ghanaians?
Well, I think the people believe that they want to see much more reduction in some expenditure that they realize were not in their interest. They realize that when government is calling upon everybody to cut down on what they expect, there's a group of people in Ghana called Article 71 employees of the state. They are actually, when you look at their salary scale and the facility made available to them, it's worrisome to labor, it's worrisome to ordinary Ghanaians, and they think that that should be revised. And also Ghanaians think that some expenditure that the government was engaging in even during COVID time, and the times in which we are complaining, they are not things that show that the government is actually on the path of prudence. So these are the things Ghanaians are talking about. So you see, government needs to do much more to win confidence of the people, especially regarding what they are doing. The people believe that if you go to some government institution, they are having a minister, about 4 deputy ministers. They believe that should be scrapped. They believe that if you go to state-owned enterprises, some of them are having deputy CEO 1, deputy CEO 2, 3, and 4. In that manner, they believe that is not the way the public purse should be utilized.
And now that the government is going back to the IMF, because, of course, debt servicing is also one of the areas of complaints and fears for the people. Now that the government is going back to IMF to talk about getting a loan and all of that, what are the concerns that Ghanaians have?
I think the concern has to do with the relationship between government and the people. Government informed the people that it was going to engage with the IMF. IMF subsequently touched down in Ghana, did its assessment with various government institutions, including Parliament, the presidency. After IMF had left, the government didn't find it necessary to provide some feedback to the people as to where we are heading to. It is only some parliamentarians who are given a piecemeal information as to what have been discovered in terms of the reserve, what have been discovered in terms of classification of debt. Now they are talking about high debt, high interest payment, high arrears that have been accumulated. And again, there are a number of debts that have been contracted by SOEs, which they think that should be added to government debt portfolio, and that will call for debt restructuring program and balance of payment support program. That is what is coming out. But the people are concerned that their government is not speaking to them as to the outcome of the first meeting with the IMF.
All right. Well, sounds like a common thing on the continent. Well, thank you so much, Professor John Gatsi, Dean with the University of Cape Coast in Ghana. Thank you for sharing your thoughts with us this afternoon.
Thank you.
Let's go to South Africa now. Petrol prices could soon be determined by free market forces as the government moves to deregulate fuel prices as part of mitigating the rising cost of living. The introduction of a price cap on 93-octane petrol will allow retailers to sell at a price below the regulated price, including discounts on petrol. This is the next step in government's two-phase approach, introduced to reduce fuel prices in addition to the temporary reduction in general fuel levy implemented from April. Currently, petrol prices fall under the category of administered prices, and the government sets the price every month with which it is sold, depending on the international oil prices and the exchange rate for the period under review. Still in South Africa, the largest fuel producer, Sasol, said that oil supply to its crucial Natref refinery has slowly started up again, and operations are expected to return to normal over the next week. This comes after Sasol had declared a force majeure on the supply of petroleum products on the 15th of July, owing to delays in delivery in crude oil shipment to Natref, and that's because of force majeure at the loading port. Sasol also said that its fuel production dropped 10% in the financial year to end in June, mainly as a result of the postponed annual planned shutdown, coal supply and quality challenges, as well as operational instabilities during the first half. And in Zimbabwe, President Emmerson Mnangagwa government is faced with a crippling job action from its restive civil servants, with public sector labor unions saying that the authorities have ignored their pleas to effect foreign currency salaries and cushion them from chronic high inflation. Last week, salary talks between the government and civil servants broke down after the authorities reportedly took too long to implement agreed conditions of service. In a letter to Public Service Minister, the joint unions told the government that workers were withdrawing from the National Joint Negotiating Council and the Health Service Bipartite Negotiating Forum. Civil servants also accused the government of making unilateral decisions during the negotiating process. This is informed by the perpetual implementation of unnegotiated salaries and conditions of service, thereby diminishing the essence of the negotiating process. And that's where we leave it for today on Business Incorporated. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.